Good evening, everyone. Good evening. Great to have you, Tony.
Hello, Naveen. How you doing?
Very good.
Yeah, good to be back on the show and good to see you as well. And good afternoon to all our viewers from all parts of the world, including Australia. Good afternoon, Sri Lanka. Good afternoon, Dubai, and whoever's joining us. Yes, Naveen.
So, we do this as a weekly session to answer all the questions we get on a weekly basis so that it can add value to the audience. Where do we start, Tony?
Well, Naveen, why don't we, talk a little bit about the interesting news about Canberra as one of the best performing, real estate jurisdictions in Australia, rather investor-friendly jurisdiction. As you and I both know, the apartment market as well as the housing market has picked up tremendously over the last 1 year, showing some serious percentage of capital gains. And of course, the entering price point is also still pretty appealing, even after the prices are picked up over the last 1 year. So why don't you elaborate a little bit about it so that our viewers can get to know that?
Definitely. As you said, Canberra is a totally neglected market. There's a lot of education which is required for people to understand the benefits of investing in Canberra. As you said, the starting price point is about $320,000, which you cannot get anywhere else in Australia, which is number one. And number two is stamp duty is only 2.1%, which is a huge benefit for a local investor and a massive benefit for a foreign investor, because otherwise they'll be paying about 13% as opposed to 2.1%. So it's an interesting time in Canberra as well. It's developing rapidly. There's been a tremendous demand for rentals. The rentals has never been an issue in Canberra. And the other interesting thing about Canberra is the price difference between apartments and houses are massive. You're looking at two-bedroom apartments about $450,000, but at the same location, you're looking at $1.2 to $1.3 million for a house. So apartments can only go up. Houses are never going to come down in price. It's definitely an interesting market and definitely something to watch out for.
Brilliant stuff. There you go. So, it's definitely, we have the facts right to show that it is one of the most friendliest real estate jurisdictions, in particular for foreign investors. Now, Naveen, the question here that I have is deliberately made by myself. These are the kind of questions, rather, not the questions, kind of concerns that I address with my investors when I go on the phone on a daily basis, in particular with my new clients and so forth, to educate them on exactly what is happening both in the housing market as well as in the apartment markets, where investors in many parts of the world has valued this opinion so far. So my question number one, Naveen, for you today is, if you could name 3 best places in Australia to pick up lands and build right now, what would that be?
Yeah, if you're looking at house and land market, Melbourne and Brisbane would be the best places to invest right now, as well as certain pockets of Sydney.
Fine. Do you have any particular, a couple of projects that you would like to name right now?
Yeah, if you're looking at Melbourne, places like Geelong in the regional area, Mickleham in the north, and Officer in southeast would be the best places right now. If you're looking at Queensland, we are looking at the southeast corridor of Queensland, which is between Brisbane and Gold Coast. That's where the development is happening. Mm-hmm. And if you're looking in Sydney, you're looking in the northwest corridor. There is a international airport opening up in 2026. So something close to that, Leppington, Box Hill, all those areas will have a lot of capital appreciation.
Brilliant, wonderful stuff. Now, number 2, what sort of capital appreciation you would looking to in those areas over the next, say, the midterm to the long term, Navin?
In average, you're looking at 6 to 10% annum is what you can expect.
6 to 10%.
Yeah.
Okay. All right. Question number 3. Is there any rental guarantee schemes involved on those house and land packages right now?
Yeah, definitely. Especially in Melbourne and Brisbane, we can definitely organize rental guarantees. And if the developers are not offering it, we ourselves offer rental guarantees to our investors so that they have a peace of mind, especially as an investment, so that from the get-go, they have rental income coming in. So we certainly do that. The guarantee will depend, the amount will depend on the suburb based on the market conditions.
Excellent, excellent. Now, Navin, this is a very interesting question that I almost, make my investors understand how important it is for them to leverage on a mortgage rather than dumping the whole amount at once. So, what is your recommendation? Would you recommend somebody to purchase, something, a property outright, or rather you would walk into the investment making use of bank financing?
I totally agree with you. Money is very cheap right now in Australia, so might as well use it. I mean, for example, if you have $1 million, rather than dumping that on one property, you can leverage 70% finance and probably get about 3 properties. And return on investment on 3 properties will be far greater than buying a $1 million property. So leveraging using the banks as a local as well as a foreigner is certainly advantageous as an investor. Excellent.
So that was very loud and clear. So question number 5. What is the mortgage rate interest for foreigners right now in terms of taking a mortgage?
If it's a foreigner, for apartments, you're looking at about 5%. House and land, you're looking at about 5.6%.
Okay, excellent. Now, is it a good idea to be paying 13% stamp duty on a property when you acquire a property as a pure investment?
Well, as a foreigner, there's no choice, I guess. It's a rule. You have to, as a foreigner, you have to pay a higher stamp duty. Having said that, the way you can minimize that is if you go for a house and land package, you're paying stamp duty only on the land value. So the package price might be 600,000, but the land value might be 300,000. So you're paying the stamp duty only on the 300,000. So it is high, but that is what it is. And I mean, if you really look at it, although it looks like a higher figure, but investment is not something you can do to get rich quick. It's not something you buy today and sell it next year. You got to keep it for at least 5 to 10 years time. And with the appreciation you're going to get over time, that will be very, very negligible. So the way to minimize it is to go for a house and land where you pay only on the land, or go for something like Canberra, what we were talking about initially, where you pay only 2.1% stamp duty.
Brilliant, brilliant. Okay, the next question is, what is your opinion on an entering price of a property investment in Australian market at this very moment in time?
Is it apartments or houses?
Let's say in both the sectors, house and land, as well as apartments.
Yeah, so apartment, again, it differs from city to city. If you're looking in Melbourne, if you're looking in the city, one bedder would be from 450 to 550,000. Two bedder would be from 550 to 800,000. And if you look at Canberra, as we discussed before, one bedder starting from 320, two bedders starting from 450. Sydney is a different ballgame altogether. If it's right in the heart of CBD, I won't be surprised if one bedder is $1 million. And but if you go a little bit further, you can get a two bedder between 650 to 900,000. Brisbane is very similar. one bed to two bed, the same price range. House and land, Melbourne, you're looking at the minimum would be about 460,000 and up to about 700,000, depending on the location. And Brisbane would be starting from again 500,000 to about 650,000. Sydney would be you're starting at about 900,000 up to 1.52 million.
Brilliant. Brilliant. Now, Navin, how important of a factor it is, the entering price for an investor as per your expertise?
No, it's very important. In any investment, if you can buy it cheap and hold it and sell it at the right time, you're going to get the maximum benefit. I mean, as advisors, it's our job, and we always do that for our investors, to get the best package and the best pricing by negotiating with the land developers and the builders for house and land as well as for apartments. So the buying price really does matter, I think.
Yeah, excellent, excellent. Now, how long will the mortgage be given? Like, what is the time period where the mortgage will be given to foreign investors?
Even for a foreign investor, you're looking at 25 to 30-year term, and that's quite normal over here. And I get asked the question, I'm 55 years of old, yes, in terms of my age, do I still get 30 years? The answer is yes. I mean, the bank knows that you're not going to keep it for 30 years, right? These are investment, you might keep it for 5 years, 10 years, you'll sell it and then set off the mortgage. And I mean, especially as a foreign investor, bank is always on the upper hand, has the upper hand, because you're lending only 60 to 70%. And as a property value, it has never, ever gone down that much. So.
All right. Okay. So my next question is, can the mortgage be covered from the rental income you make?
If you're going for a 60 to 70% loan, it's definitely going to be covered. That's how we structure it. We always structure it in a way that your mortgage is covered by the rent. Once you put your capital investment, it's going to be a hassle-free investment until you sell it. And that's how we always structure it, and it is always covered.
All right. Okay. Navin, can you describe a little bit about the exit strategy of a 5-year investment plan that we have for our investors?
So exit strategy is once you buy the property, you rent it out, and then at the end, when you want to exit, you sell it. And it's very simple. You put it to market, sell it, and then once you get your proceeds, you can repatriate the money back to the home countries or keep reinvesting in Australia. So exit strategy is to sell the property and get the capital plus the returns back.
Excellent, excellent. Okay. Navin, what project provides the highest rental incomes at this very moment in Australia, and what cities are they in right now?
The highest rental returns will be in Canberra. Right now, we have a 7% guaranteed return scheme in Canberra. So that's huge. I mean, anywhere in the world, 7% is a great return. I mean, just to give an example, if it's a $400,000 property, you're looking at about $28,000 per annum, or about $2,303 per month, which is quite phenomenal.
Absolutely. Yeah. So if you were to take something like Melbourne, what is the rental guarantee that you have? What's the highest rental guarantee that you have right now?
We are looking at about 4.5% to 5% based on the location.
Mm-hmm. Okay, brilliant. What is the process of taking equity against the existing property? And can you talk about how people maximize their portfolios, investors maximize their portfolios in the Australian part of the world?
Yeah, that's a great question. So let me give an example. Let's say someone buys a property at $500,000. Mm-hmm. Over time, he keeps renting it for about, say, 3-4 years. And then when he wants to buy another one, say, for example, the property is $700,000 is the valuation, which means he has equity of $200,000. out of that $200,000, you can get 80% out from the bank, meaning your current mortgage will go up by $200,000 or 80% of 200,000 or 160. And you can take that out as cash out and put that as a deposit towards your second investment property. So that way you're getting the properties to talk rather than putting your cash or your investment. So once you can keep going like that, when you have multiple properties, all your properties are appreciating and you can keep getting the equity out. And although the current investment loan goes up by a second some amount, it is okay because it's always the tenant is paying that mortgage. So you're not going to pay that mortgage. You have tenants, rents are always going up every year, and your mortgage goes up, but then again, the tenant is paying for it. Likewise, you can, I mean, over a period of 20 years, you can have a multiple property portfolio by utilizing the equity of each of the properties. So it's very important that we select the properties in the right location at the right time so that they can get the maximum benefit of the growth.
Good stuff, Navin. Good stuff. So, ladies and gentlemen, so this is exactly how you maximize a portfolio of properties when you have a strong economy, like Australia, and we and Navin and Greg, we will always assist you every step of the way. Other than the rental incomes as well as the capital gains, there are, little more secrets, of how you can maximize your wealth with a huge portfolio of properties like this, just like, by making use of the equity that you have on your current properties. So, Navin, that's pretty much the question here that I have for you today.
Brilliant. Great set of questions, and hope that has added some value to the audience, and we'll continue to do this every week to talk about all the questions we got. Yeah.
And Navin, just to before we wrap things up, there's a lot of things happening. I think the market is at an all-time high of real estate transactions, right, Navin? So
absolutely,
every day you delay, I would say, is if a delay that you delay on your profit taking with the Australian market. So we are working 24/7. Do touch base with the Grid Property Melbourne, Sri Lanka, and we are more than happy to assist you. And the good news is we have people coming on board every now and again, understanding how good of a market Australia is. So that's exactly what we do. Hold our hands, and we assure you for a long-term business relationship with us, of course, filled with profits with properties in Australia.
Absolutely.
So that's all I have from my end now.
All right.
Got anything else?
Much. We'll see you next week.
All right, then. Thank you for your time. Thanks, everyone.